You just bought the wrong insurance policy, and when your first claim is filed, your carrier will deny it, your broker will disappear, and you'll be left with a destroyed truck, a massive lawsuit, and a business that vanishes overnight because your broker never told you the hidden truth about your policy type. You got your policy, you paid your premium, and you thought you were fully protected. But here's the gut-wrenching truth that 90% of new authorities never discover until their first claim is denied. Your policy might be completely worthless because you bought the wrong type of coverage. There are two different types of insurance policies: occurrence form and claims made. One protects you forever, even after you cancel. The other has an arcane trap, a hidden time limit that can leave you completely exposed without any warning. And most brokers will never explain the difference because they want to sell you the cheaper option. Brokers reject claims-made policies because they know the esoteric truth. These policies only cover claims if the policy is active at the time the claim is filed, not when the accident happened. If you switch carriers or cancel your policy, your coverage disappears retroactively. The claim is denied, you're left with a six-figure bill, and your business is destroyed. By the time this video ends, you will know the exact difference between these two policies, why brokers refuse to accept claims-made coverage, and how to avoid the catastrophic trap that has destroyed thousands of carriers. This one knowledge can save you from financial destruction and protect your authority. There is one critical question you must ask your agent before you buy any policy, a question that 90% of new authorities never think to ask. If you do not ask this question, you could be driving with a phantom policy that is worthless right now, and I am about to reveal exactly what that question is. You buy your insurance policy, you pay your premium on time, and you assume you are fully covered against any accident that happens while you are on the road hauling freight for your customers. You trust your agent completely. You trust your policy to protect you, and you trust that your broker will accept your coverage without any questions or hesitation. Here is the arcane truth that 90% of new authorities never discover until their first claim is denied and their business is destroyed. Not all insurance policies are created equal, and the type of policy you buy determines whether your claim will be paid or rejected immediately. Your policy might be completely worthless if you bought the wrong type because the insurance industry has created an esoteric distinction that most carriers never understand until it's too late and their claim is denied. The difference between occurrence form and claims-made policies is not just a technicality. It is a critical distinction that can save your business from destruction or destroy it completely without any warning. Your survival depends on understanding this hidden trap before you buy your policy. Because once you have an accident, it is too late to change your coverage. The agent will not protect you, the broker will not protect you, and the carrier will deny your claim if you bought the wrong policy. Your future depends on knowing the truth before you sign on the dotted line. You buy an occurrence form policy and you assume it works like every other insurance policy you have ever heard about in your entire life. Here's the unsettling reality that gives you complete peace of mind. An occurrence form policy covers any accident that happens during the policy period, regardless of when the claim is actually filed years later. If you have an accident in 2024 and cancel your policy in 2025, but the claim is filed in 2026, the occurrence policy still covers you completely because the accident happened while the policy was active and in full force. This is the gold standard of insurance coverage because it provides lifetime protection for any incident that occurred during the policy period, giving you permanent security. The carrier is legally obligated to cover the claim even if you switch insurers or cancel your policy years ago, and they cannot deny you. Your survival depends on understanding that occurrence policies give you permanent protection for accidents that happen while you are insured, protecting your business forever. This is the policy that brokers accept without question because they know it provides real protection that cannot be taken away. Your future depends on choosing the right policy from the very beginning. You buy a claims-made policy because it is cheaper than an occurrence policy, and you assume it provides the same protection at a lower cost without any hidden traps. Here is the arcane truth that catches every carrier off guard and destroys their business. A claims-made policy only covers claims that are filed while the policy is active, not when the accident actually happened months or years earlier. If you have an accident in 2024 and cancel your policy in 2025, but the claim is filed in 2026, the claims-made policy will not cover you because the policy was not active at the time the claim was filed with the carrier. The carrier will deny your claim immediately without any hesitation, leaving you with a destroyed truck, a massive lawsuit, and a business that disappears overnight. The policy you thought was protecting you was actually a phantom that vanished the moment you needed it most, leaving you completely exposed. Your survival depends on understanding this critical difference before you buy your policy, because once you have an accident, it is too late. The savings you thought you were getting were actually a deception that cost you everything you worked so hard to build. You buy a claims-made policy, and you assume you are covered even after you cancel because the policy says it covers claims made during the policy period. Here is the revelatory truth that destroys your understanding and exposes a hidden cost. Claims-made policies often require you to purchase tail coverage or extended reporting period coverage if you want protection after you cancel the policy. Tail coverage can cost anywhere from 100% to 300% of your annual premium, making it an expensive add-on that most new authorities simply cannot afford. If you do not buy tail coverage, any claim filed after your policy end will be denied, even if the accident happened while you were insured and covered. Your survival depends on understanding that a claims-made policy does not protect you after you cancel, unless you pay for an expensive extension that could cost thousands of dollars. Most carriers do not budget for this hidden cost and are destroyed when they discover they are completely unprotected. The policy you thought was affordable actually becomes incredibly expensive if you want to stay protected after cancellation. Do not fall for this trap without understanding the true cost of tail coverage. You buy a claims-made policy, you have your certificate of insurance, and you send it to your broker expecting them to accept your coverage and give you loads. Here is the shocking truth that leaves you stranded without work. Most brokers and shippers will reject claims-made policies because they know the hidden trap and do not want the liability. Brokers require occurrence policies because they want certainty that your coverage will pay for any accident that happens while you haul their freight, regardless of when the claim is filed years later. If you cancel your policy, a claims-made policy will not cover claims filed after cancellation, leaving the broker exposed to liability and potential lawsuits. Brokers do not want to take that risk, so they simply reject claims-made policies and move on to the next carrier who has proper coverage. Your survival depends on knowing that buying a claims-made policy could prevent you from getting loads from reputable brokers who pay well. Your authority will be active, but you will have no loads because no broker will accept your insurance. The policy you bought to save money actually costs you thousands in lost revenue because you cannot get work. You trust your agent to recommend the best policy for your business, and you assume they're looking out for your best interests. Here is the critical truth that exposes a hidden deception. Many agents sell claims-made policies because they are cheaper and easier to sell, allowing the agent to close the deal quickly and collect their commission. The agent knows that a claims-made policy costs less upfront, making it attractive to new carriers who are trying to save money and stretch their budget. The agent also knows that most new carriers do not understand the difference between policy types, so they take advantage of that ignorance to make a quick sale. Your survival depends on understanding that your agent's recommendation may not be in your best interest. It may be in their commission's best interest. The agent gets paid either way, but you are the one who suffers if your claim is denied. Always ask your agent why they are recommending a particular policy and what their commission structure looks like. Your business depends on making the right choice, not the choice that makes your agent the most money. You have an accident on the highway. Your truck is damaged beyond repair, and you file a claim with your insurance company expecting them to cover the loss. Here's the gut-wrenching truth that ends your business and destroys your future. If you have a claims-made policy and your policy is not active at the time the claim is filed, the carrier will deny your claim immediately. The carrier will tell you that your policy was not active when the claim was made, so they have no legal obligation to pay your claim at all. You will be personally liable for the accident, including all damages, medical bills, legal fees, and any judgments against you that could reach millions. Your survival depends on understanding that a claims-made policy can leave you completely exposed if you ever cancel your policy or switch carriers without proper coverage. The accident that could have been covered becomes a financial disaster that destroys everything you have built. Your truck, your authority, your savings, and your future are all gone because you bought the wrong policy. Never let this happen to you by understanding the difference before you buy. You buy a claims-made policy, and you assume it covers all accidents that happen while you were insured, regardless of when a claim is filed. Here's the devastating truth that creates false confidence. Claims-made policies often include a retroactive date that limits how far back the policy will cover claims. If your retroactive date is set to the day you bought the policy, any accident that happened before that date is not covered, even if you were insured at that time with another carrier. If your retroactive date is not set back far enough to cover your entire period of operation, you could have a gap in coverage that leaves you completely unprotected. Your survival depends on understanding the retroactive date and ensuring it covers your entire period of operation without any gaps. Many carriers are destroyed because they did not check this date and discovered too late that their coverage did not go back far enough. The hidden limit becomes a devastating trap that denies your claim and destroys your business. Never assume your policy covers everything. Always check the retroactive date. You compare the cost of an occurrence policy and a claims-made policy, and you choose a cheaper option to save money up front and stretch your budget. Here is the arcane truth that costs you more in the long run. Occurrence policies cost 30% to 50% more than claims-made policies because they provide permanent protection and lower risk for the insurer. While you may save money in the first year by choosing the cheaper policy, you could lose everything in a claim denial if you bought the wrong policy. Your survival depends on understanding that the upfront savings of a claims-made policy are not worth the catastrophic risk of a denied claim that could reach millions. Pay more now to protect yourself forever, or pay everything later when your claim is denied and your business is destroyed. The choice is yours, but the consequences are permanent. The cost difference is small compared to the cost of losing everything you have built. Spend the extra money to protect your business properly. You have a claims-made policy with Carrier A, and you decide to switch to Carrier B to save money or get better coverage. Here is the overlooked truth that destroys your protection. When you switch from a claims-made policy to another claims-made policy, you must ensure that the new policy accepts your prior coverage and does not leave a gap. If the new policy does not accept your prior coverage, any claim filed after the switch will be denied because the old policy is not active and the new policy does not cover prior incidents. Your survival depends on ensuring that your new policy provides prior acts coverage or that you buy tail coverage from your old carrier. Switching carriers without proper planning can leave you completely exposed and unprotected. Many carriers are destroyed by this mistake because they did not understand the switch risk. Do not make this mistake and protect your business by understanding the switch rules before you change carriers. You switch insurance carriers and you assume your new policy covers accidents that happened before the switch, as long as you were insured at the time. Here is the overlooked truth that creates a protection gap. Claims-made policies do not automatically cover prior acts, which are accidents that happened before the current policy period started. You must specifically request prior acts coverage or full prior acts from your new carrier to ensure that your policy covers accidents from your previous policy period. If you do not request this coverage, any claim from a previous accident will be denied because the new policy does not cover prior acts. Your survival depends on explicitly requesting and verifying prior acts coverage when you switch carriers to avoid a devastating protection gap. Many carriers assume they are covered and discover too late that they are not protected. Always get prior acts coverage in writing before you switch carriers and never assume it is included. The gap in coverage could destroy your business if an old claim is filed. You submit your claims-made policy to a broker and they reject it, leaving you confused and unable to get loads. Here's the ruthless reality that limits your opportunities. Occurrence policies are the industry standard for trucking, and most brokers will not accept anything else. Brokers and shippers require occurrence policies because they provide certainty that your coverage will pay for any accident that happens while you haul their freight, regardless of when a claim is filed. Claims-made policies are seen as risky because they can expire and leave the broker exposed to liability. Your survival depends on understanding that buying a claims-made policy can severely limit your ability to get loads from reputable brokers. You may save money on the policy, but you will lose thousands in revenue because you cannot get work. The brokers will simply move on to the next carrier who has proper occurrence coverage. Do not limit your business opportunities by buying the wrong policy and getting rejected by brokers. You cancel your claims-made policy because you are switching carriers or taking a break from trucking. Here's the insidious truth that destroys your protection. When you cancel a claims-made policy, your coverage disappears completely for any claims filed after cancellation date. Even if the accident happened while you were insured, the carrier will deny the claim because the policy was not active when the claim was filed. Your survival depends on understanding that you cannot simply cancel a claims-made policy without purchasing tail coverage to protect yourself from future claims. Many carriers cancel their policies without thinking about tail coverage and are destroyed when a claim is filed years later. The cancellation that you thought was simple becomes a devastating trap that leaves you completely exposed. Never cancel a claims-made policy without understanding the tail coverage requirements and protecting your business properly. Your future depends on this knowledge. You check the FMCSA Safer system and you see your insurance status is active, so you assume your policy type does not matter to anyone. Here's the cryptic truth that creates false confidence. The FMCSA does not care whether you have an occurrence policy or a claims-made policy as long as you have proof of insurance on file. The FMCSA will activate your authority regardless of the policy type, giving you a false sense of security and protection. But brokers and shippers do care, and they will reject claims-made policies even though the FMCSA accepts them. Your survival depends on understanding that the FMCSA's acceptance does not mean your policy is good enough for brokers. The FMCSA only cares that you have coverage, but brokers care about the type of coverage because it affects their liability. Do not rely on the FMCSA's acceptance as validation of your policy type. Always check with your brokers before buying a policy. You buy a claims-made policy and you assume your coverage starts immediately on the effective date. Here's a non-negotiable truth that delays your protection. Claims-made policies often have a retroactive date that determines when coverage actually starts. If your retroactive date is set to the effective date, any accident that happened before that date is not covered. Your survival depends on understanding that your coverage does not start on the effective date if your retroactive date is not set back far enough. You must ensure that your retroactive date covers your entire period of operation to avoid gaps. Many carriers are destroyed because they did not understand the retroactive date and discovered too late that their coverage did not cover previous accidents. Always check your retroactive date and ensure it is set back far enough to protect you properly. Your coverage is only as good as your retroactive date. You want to protect your business from claim denials and broker rejections by choosing the right insurance policy type. Here is the revelatory truth that saves your authority and protects your business. You must buy an occurrence form policy to ensure you are fully protected and brokers will accept your coverage. Step 1. Ask your agent specifically whether the policy they are recommending is occurrence or claims made and get it in writing. Step 2. If your agent recommends a claims made policy, ask them why and demand to know the tail coverage cost before you buy it. Step 3. Request a detailed explanation of the retroactive date and ensure it covers your entire period of operation. Step 4. Verify with your broker that they will accept your policy type before you buy it to avoid rejection. Step 5. If you already have a claims-made policy, purchase tail coverage immediately to protect yourself from future claims. Step 6. When switching carriers, always request prior acts coverage to avoid gaps in protection. If you follow these steps, you will never face a claim denial or broker rejection because of your policy type. The agent works for you, but you are the only one who can protect your business from the catastrophic consequences of buying the wrong policy. Your survival depends on choosing an occurrence policy and verifying every detail before you sign. Protect your business by knowing the truth and making the right choice every time. You buy a claims-made policy because you want to save money on your insurance costs, and you assume that any broker will accept your coverage because you have a valid policy number. Here is the arcane truth that destroys your revenue and leaves your truck empty. Most brokers will reject claims-made policies outright because they know the hidden trap and do not want the liability. When your broker rejects your policy, you lose loads, you lose revenue, and your truck sits empty while other carriers with occurrence policies get all the work. Each rejected load costs you hundreds or thousands of dollars in lost revenue, and over a year, this can add up to tens of thousands of dollars in lost income. Your survival depends on understanding that buying the wrong policy does not just risk your claim, It risks your entire revenue stream and your ability to keep your business running. The money you save on your premium is nothing compared to money you lose from rejected loads and empty trucks. Your business cannot survive if you cannot get work, and brokers will not give you work if you have the wrong policy. You think that even if your broker rejects your claims-made policy, you can go directly to shippers and get loads without a broker. Here's the revelatory truth that destroys this assumption. Most shippers follow the same standards as brokers and require occurrence policies for the same liability reasons. Shippers do not want to take the risk of a claims-made policy because they know that coverage can disappear after cancellation, leaving them exposed to lawsuits. If a shipper accepts your claims-made policy and you later cancel it, any claim filed after cancellation would not be covered, and the shipper could be held liable for damages. Your survival depends on understanding that shippers are even more risk-averse than brokers because they have more to lose. The shipper will simply move on to the next carrier with proper occurrence coverage, leaving you without work and without revenue. Do not assume that skipping the broker will solve your problem, because the shipper will reject you just as quickly. Your business depends on having the right policy that is accepted everywhere. You look at the cost difference between an occurrence policy and a claims-made policy, and you wonder if the extra cost is really worth it. Here is the shocking truth that makes the decision clear. An occurrence policy is worth every single penny because it provides permanent protection, broker acceptance, and complete peace of mind. With an occurrence policy, you never have to worry about tail coverage, retroactive dates, or claims being denied because your policy was not active. Your broker will accept your coverage without questions. Your shippers will trust you, and your business will grow without the fear of catastrophic claim denial. Your survival depends on understanding that the extra cost in an occurrence policy is an investment in your business's future, not an expense. The money you spend on the right policy is nothing compared to the money you will lose from a denied claim or rejected loads. Pay the extra cost now to protect your revenue and your future forever. You trust your agent to give you honest advice about which policy to buy, and you assume they have your best interests at heart. Here is the critical truth that exposes a hidden incentive. Many agents receive higher commissions or bonuses for selling claims-made policies because they are less regulated and easier to process. Agents also know that claims-made policies often lead to more premium increases over time, generating more commission revenue for the agent. Your survival depends on understanding that your agent's recommendation may be driven by their own financial interests, not your protection. Always ask your agent why they are recommending a particular policy and what their commission structure looks like. If they cannot give you a clear, honest answer, find a new agent who puts your protection first. Your business is too important to trust to an agent who is looking out for themselves instead of you. The wrong policy can destroy your business, but the right agent can save it. You have a claims-made policy, and you assume you have plenty of time to report claim because you have a year or more to file. Here is the gut-wrenching truth that destroys your protection. Claims-made policies often have strict reporting deadlines that require you to report a claim within a specific time frame, usually 30 to 60 days. If you fail to report a claim within that window, the carrier can deny your claim even if the policy was active at the time of the accident. Your survival depends on understanding that claims-made policies have tighter deadlines than occurrence policies and require you to be more vigilant. If you miss a reporting deadline, your claim is denied, your business is destroyed, and there is nothing you can do about it. Always report any potential claim immediately, regardless of whether you think it is serious. The reporting deadline is non-negotiable, and missing it can cost you everything you have built. You switch from a claims-made policy to an occurrence policy, and you assume your old claims-made policy no longer matters because you have new coverage. Here is the devastating truth that can save your protection. If you had a claims-made policy and switched to an occurrence policy, you may still be protected for accidents that happened under the claims-made policy if you purchased tail coverage. However, if you did not purchase tail coverage, your old claims-made policy will not cover any claims filed after you canceled it. Your survival depends on understanding that your old policy does not automatically protect you after cancellation, and you need to take action to protect yourself. If you are switching from claims made to occurrence, make sure you have tail coverage or confirm that the new occurrence policy provides prior acts coverage. The gap in coverage can destroy your business if a claim is filed from a previous accident. Never assume your old policy will protect you after you cancel it. You are considering buying tail coverage for your claims-made policy, but you are shocked by the cost and wonder if it is worth it. Here is the overlooked truth that leaves most carriers exposed. Tail coverage can cost 100% to 300% of your annual premium, making an expense that most new authorities simply cannot afford. Many carriers choose to skip tail coverage because they cannot afford it, not realizing that they are leaving themselves completely exposed to future claims. Your survival depends on understanding that if you cannot afford tail coverage, you should not buy a claims-made policy in the first place. The cost of tail coverage is a hidden expense that can destroy your budget and your business. If you cannot afford tail coverage, choose an occurrence policy instead and pay more upfront for permanent protection. The cost of tail coverage is not optional. It is a necessary expense to protect your business. You have an insurance policy, but you are not sure whether it is occurrence or claims made because you did not pay attention when you bought it. Here is the cryptic truth that helps you verify your policy type. You can check your policy's declarations page or policy form to find the policy type clearly stated. Look for the words occurrence or claims made on the first page of your policy document. If you cannot find it, call your agent and demand a clear answer in writing. Your survival depends on knowing exactly what type of policy you have, because your entire protection depends on it. If you have a claims-made policy, you need to understand the tail coverage, retroactive date, and reporting deadlines. If you have an occurrence policy, you have permanent protection and nothing to worry about. Never operate without knowing your policy type, because your business depends on it. You want to protect your business from claim denials, broker rejections, and financial destruction by choosing the right insurance policy type. Here is the revelatory truth that saves your authority and protects your business forever. You must buy an occurrence form policy and never accept a claims-made policy under any circumstances. Step 1. Always ask your agent specifically whether the policy they are recommending is occurrence or claims made, and demand written confirmation of the policy type before you sign. Step 2. If your agent recommends a claims-made policy, immediately reject it and ask for an occurrence policy instead, regardless of the cost difference. Step 3. Verify that your occurrence policy has no retroactive date limitations and provides full coverage for all accidents that happen while you are insured. Step 4. Confer with your broker that they accept occurrence policies and will give you loads without any issues or restrictions. Step 5. If you already have a claims-made policy, start the process of switching to an occurrence policy immediately and purchase tail coverage to protect yourself during the transition. Step 6. Never accept a claims-made policy from any agent or carrier because the hidden traps are not worth the cost savings. If you follow these steps, you will never face a claim denial, broker rejection, or financial loss because of your policy type. The agent works for you, but you are the only one who can protect your business from the catastrophic consequences of buying the wrong policy. Your survival depends on choosing an occurrence policy, verifying every detail, and never compromising on protection of your business. Protect your authority, protect your revenue, protect your future, and never accept a claims-made policy again. You have now uncovered the complete hidden truth about the exact difference between occurrence form and claims-made policies, and why brokers reject claims-made coverage without hesitation. The shattering reality is that a claims-made policy is a dangerous trap that can deny your claim, destroy your business, and leave you completely exposed to financial ruin. You have learned that occurrence policies provide permanent protection, broker acceptance, and complete peace of mind, while claims-made policies have hidden traps like tail coverage, retroactive dates, and reporting deadlines that can destroy you. By choosing an occurrence policy, you will save yourself from thousands of dollars in denied claims, rejected loads, and the complete destruction of your trucking business. You will save time by avoiding the confusion of tail coverage and retroactive dates. You will save money by preventing claim denials. And you'll protect your business from the gut-wrenching loss of operating without real coverage. The agent works for you, but the insurance carrier and the policy type determine whether your claim is paid or denied. Your survival depends on understanding this critical difference and choosing the right policy before it is too late. The power to protect your authority, your revenue, and your future is now in your hands. Use the knowledge from this video to choose occurrence, haul with confidence, and build your business on a foundation of real, permanent, and accepted coverage. Do not let a deceptive agent, an esoteric policy trap, or an uncanny denial destroy everything you have worked so hard to build. You are now armed with the complete truth, the exact steps, and the unwavering confidence to protect your business from the hidden trap that has destroyed thousands of carriers before you. Choose Occurrence, protect your business, and succeed in this industry with the right coverage. If you want to complete Occurrence versus claims made comparison checklist and the exact questions to ask your agent before you buy, drop Occurrence in the comments below. Everything else is in your hands. Choose right, protect first. If this video helped you, consider subscribing to New Authority Trucking Insurance Guide on YouTube. I break down FMCSA rules, insurance traps, and compliance hacks so you can build your trucking business the right way. New videos drop twice a day. Don't miss the one that could save you thousands on your next renewal. I'll catch you in the next one. Your MCS 150 form is the backbone of your FMCSA registration. And if it's wrong, your US.dot number gets deactivated before you even know it. The 5 errors I cover today cause 90% of rejections, but they are completely preventable with the right checklist. If you want the exact 5-step MCS 150 verification checklist to avoid rejection and keep your authority active, drop the word MCS 150 in the comment below. I will send you the complete guide that covers every error, every mismatch, and every deadline you need to track. Because one wrong box on your MCS 150 can cost you weeks of delay, but the one who verifies first gets approved first. If you want a complete step-by-step guide and the exact checklist for everything I covered in this video, drop the word, keyword, in the comments below, because knowing it is one thing, but having it in your hands is everything. If you found this breakdown helpful, subscribe to New Authority Trucking Insurance Guide on YouTube for more expert insights, step-by-step compliance guides, and hidden strategies to protect your trucking authority. I release new videos daily at 6:30 a.m. and 8 p.m. to help you save time, save money, and stay compliant with FMCSA rules without expensive consultants. Your subscription ensures you never miss the next critical breakdown, because your authority deserves the right protection. Stay safe, stay legal, and I'll see you in the next video. If this video helped you, consider subscribing to New Authority Trucking Insurance Guide on YouTube. I break down FMCSA rules, insurance traps, and compliance hacks so you can build your trucking business the right way. New videos drop twice a day. Don't miss the one that could save you thousands on your next renewal. I'll catch you in the next one. There's always one question that every carrier asks after watching these videos. How do I apply this to my situation right now? The answer is simpler than you think. Every video on this channel comes with a hidden checklist that you can access just by commenting the keyword I mentioned at the end. Because I know that reading it once is not enough. The real value is in having a step-by-step guide you can download, print, and check off as you go. And this time is no different. Comment the word I mentioned earlier, and I will send you the exact breakdown that 90% of carriers never discover until it's too late. Your success is not a matter of luck. It is a matter of preparation, and that preparation starts right here. The truth about FMCSA compliance is simple. What you don't know will cost you. Every video on this channel is built on one promise: to reveal the hidden traps, the unsolved mysteries, and the money-saving secrets that 90% of carriers never discover until it's too late. Today's video was no exception, but it was only one piece of the puzzle. There's always another layer, another rule, another mistake that carriers make without realizing it. And that is exactly what the next video will uncover. A hidden trap that most new authorities walk straight into because nobody warned them. If you want to be the one who sees it coming, keep this channel close. 2 videos drop every day at 6:30 a.m. and 8 p.m. because your authority, your time, and your money deserve more than guesswork. Until the next one, take a moment, check your filings, review your safety profile, and make sure every document is in order. Because in trucking, the ones who stay ahead are the ones who stay informed. This is New Authority Trucking Insurance Guide, where your success is built on knowledge, not luck. If you want the exact authority transfer checklist and the specific FMCSA support portal navigation to record a transfer properly, drop transfer in the comments below. Everything else is in your hands. Transfer properly or stay liable forever. This content is for educational and informational purposes only and does not constitute legal, financial, or insurance advice. FMCSA, DOT, and insurance regulations vary by state and situation. Please consult with a qualified legal professional, certified insurance agent, or FMCSA authority for specific guidance. The creator assumes no liability for any actions taken based on this content. Always verify current regulations directly with the FMCSA and your insurance provider.